Max, good to see you. So this is complicated, but I'm hoping you can clear it up. What's happening with the guidance as your user numbers ramp considerably, transactions are ramping considerably. You're moving from being a little bit more Peloton-centric to more, Amazon, Walmart, Shopify, and you've got these interest-bearing loans where revenue is recognized differently. So give us the straight-ahead understanding of how that affects the guidance.
That's exactly right. You basically summarized it for me. So different products that we sell to merchants have different profitability profiles and different recognition of revenue. More interest-bearing transactions take time to bring revenue. Transactions with 0% APRs, of course, primarily get recognized on the spot. And as mix changes, as you pointed out, deconcentrating from some of our strengths in home fitness, which is, by the way, still going really, really strong, you will see this mix change. And over time, it'll, of course, normalize because ultimately the same dollars of revenue will come in. But mix is something that our investors have to understand pretty well. And you'll see it play out very well over the next several quarters.
So to clarify there, especially given Peloton, that was revenue at zero APR. You were recognizing all up front, and it's big dollar revenue, right? Because these bikes are expensive, and you're transitioning more towards smaller dollar transactions at very high volume, right? With customers who you're hoping are going to be loyal over time. But not only are the dollars smaller, even though the transactions are more, but those are going to be recognized over a longer period of time?
Yeah, and you can actually see the numbers already. If you look back at the quarter we just reported, the active user base went up 1.5 times. So it's enormous. And the frequency of transactions went up at the same time. If you think of it, these are a huge number of new users we're adding. So they only really had a chance to transact just once. And yet the transaction per user number is also up. So you see frequency continue to happen. And so it will, over time, build. And of course, there's a massive network effect as we cross-sell our merchants to our consumers. So over time, this accretes very, very significantly. But you're completely right. Revenue recognition of interest income stretches over multiple quarters, depending on the term that the consumer chooses, while a lot of the home fitness that was so incredibly popular during the pandemic is recognized on the spot.
Hey, Max, good morning. It's Deirdre. I know you've talked a lot about the Amazon partnership and how it has increased your GMV and future opportunities for other merchants. But can you clarify what it's doing to your take rate in terms of transactions and how much you may be having to give up there?
We've chosen not to break out the exact economics per partner. Obviously, these are sensitive commercial terms. We're very, very happy with the deal that we were able to negotiate with all of our partners. And obviously, if you look at Amazon transactions today, there's not a whole lot of 0% transactions taking place there. The whole point of our business is that both the merchant and the consumer side pay something.
Right.
Different merchants, different deals shift that cost from one to the other. And so you'll see us introduce new products across all of our partners where the mix will change all the time.